Good morning and thank you for joining us on Morning Markets from True Potential. Today I want to just talk a little bit about asset markets from yesterday, but focus in on what we heard from the European Central Bank and also from the US in terms of the inflation number. So asset markets yesterday, very much sentiment driven. We commented on the talks that were starting between Russia and Ukraine. They swiftly ended and didn't bring any major change whatsoever, and that really just impacted asset market sentiment. So we did see European equities come off as a result of that. Looking into the ECB meeting, I think there's a number of interesting things coming out from that, particularly around the communication as to how they are thinking about monetary policy in the coming months, but also just subtly starting to show the impact of the Russia-Ukraine conflict on the Eurozone. And that's very much evident when we look at the inflation reading. So inflation was revised up for 2022 from 3.2% to 5.1%. And at the same time, we saw a reduction in growth. So growth previously estimated at 4.2%, that revised lower to 3.7%. So some of the initial implications there are starting to work their way through. The other point that is worth noting is in the communication, they did really discuss the need to move on with potential interest rate increases, but firstly removing the monetary accommodation that is being provided by the ECB at this point. So that's a bit of a change from the ECB and probably gives them now the leeway to move with interest rates towards the end of the year. So very much central banks focusing in on that challenge of rising inflation, but having to move monetary policy to deal with that. In the US then, we had the inflation number for February, very much in line with everyone's expectations at 7.9%, the highest reading that we've seen since, I think, 1982. We have to look back in the chart to get something similar. So that gives you some context of how significant inflation has changed over the recent number of months. Really digging into that, it's very much the factors that we're familiar with here in the UK. Rising energy costs, you just have to look at what's happening as you drive past a petrol station to see how petrol prices are moving, and that really being a significant contributory factor to what we're seeing in US inflation. Also, the housing element that we've discussed in recent months is also feeding into the inflation readings in the US, so that's something that's at a 20-year high. So again, just some of the historical precedent that we have there. Looking to really the day ahead, it's very much about inflation in the Eurozone, and we'll get some detail from Germany and Spain. And here in the UK this morning, we've also had good, albeit backward-looking GDP data for January, with GDP growing 0.8%. And the reason I mention that, it takes the UK economy back above those levels that we had pre-COVID. And that in and of itself, I suppose, is a very noticeable point. But then we have to think about, just looking forward, the impact of how Russia, the Ukraine situation will impact on growth going forward. I'll leave it there for our comments. Please look out for the podcast later today and look forward to speaking to you again next week.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.